Well, hello there, Maverick traders, and welcome to today's market roundup for June 16th. Well, this is a trader's paradise. We have volatility on volatility on volatility in multiple asset classes, currencies absolutely included. So there's a lot to talk about. Let's get into it. Okay, so the big news here is that equity markets remain under pressure. They completely gave up the gains off of the wild action from yesterday's FOMC report after the Fed raised rates by the highest amount in quite some time, decades, literally. And cryptos continue their downward decline as well. So it's been pretty inspiring or awe-inspiring to see. I wish we had the ability to play the short side here at the firm in cryptos. Maybe interactive brokers will give us that functionality in the future. So starting off with the S&P 500 cash index, you can see here we put in a pretty weak daily candle yesterday, and the next candle, today we didn't quite close on the lows. So if bulls want to breathe any kind of size of relief here, I think that's the one thing they have going on them is that the market did bounce a little bit in the closing minutes of the session. However, the relative strength index is still not deeply oversold, and I would expect it to have to reach a fairly oversold condition before the markets can really bounce. So we'll have to see what happens next, but the moving averages have now sloped back down, and we've completely given up all the gains from the May 20th bottom that we put in here. So it's not looking good for equity markets. Let's be honest. We're seeing multiple gaps on the way down. The distance from the moving averages does make me wonder whether we're due for a relief rally anytime soon. And my hunch, my personal hunch is that we are closer to a bottom here in the markets, than we are to a prolonged slide lower. But we'll have to see. We'll have to see what the priced action has to give us. So that's my personal bias. On the other hand, there's no way that I'd want to play this market on the long side until we get a really strong rally higher followed by an orderly pullback. That would be the kind of setup I'd be looking for if I'm looking to trade the S&P 500. And it's no different over here in the total world stock index. RSI is not fully oversold, gave up yesterday's gains, and we didn't close on today's lows. So it's a pretty mixed bag here, but the market is definitely bearish. All right, definitely bearish. So just because I think that we're approaching a bottom here doesn't mean that we in fact are. And I'm not going to trade that opinion. I don't like trading opinions. I like trading what the price chart has to say. So I'm going to follow the charts. If the price charts give me setups to go short, I'm happy to play the short side. But I'm just going to be aware of that opinion that I have and keep it in my back pocket. And over here in crypto, we've been talking about this low base for weeks now, broken down. And I don't really see any end in sight here for cryptocurrencies, but the technicals tell us that this is a pretty stretched out move. The market's incredibly oversold, and we have quite a distance to go to meet these moving averages. So we'll have to see whether or not cryptos can get a bounce, but given that we're restricted to the long-only side here at Maverick, I don't see any reason to be buying this market. None whatsoever. So I'd say move on, stick to fiat for the time being. So the market remains a -3, and we don't really have any hard economic data coming out, although Chair Powell is going to be speaking tomorrow at 8:45 a.m. So we'll see if he has anything to say that the market is going to react to. Very possible. Heading into currency analysis now. So over in crypto land, it's just a sea of red. None of the major cryptos have done well. In many cases, we're looking at 10% losses on the day or more. What more can I say here, guys? It's in a bear market. Do not try to catch this falling knife. Wait for clear evidence that a bottom is in, and we don't even have a shred of evidence that any kind of bottom is in yet as far as cryptos are concerned. Over on the currency side, this is really, really interesting. The Swiss franc is by far the outperformer of the day, given the news from the S&B that they moved rates higher. Rates are still negative, as I understand it, but they've gone higher, and that was definitely enough to send the Swiss franc soaring today. I'll be personally very interested to see whether the franc can hold on to its gains here. You'd be surprised that the yen didn't have a stronger showing. Given how risk-off the entire market was. Part of the macroeconomic explanation for that could have to do with Japan's central bank still not making any concrete policy changes yet. That might change tomorrow. If I'm just going to go back to the economic calendar here for a second. So there is a Bank of Japan press conference. It's tentatively scheduled. So we'll have to see if there is any announcement overnight. But the BOJ is definitely under considerable pressure here, given how weak the yen has become. So we'll see if they are planning on intervening in any way whatsoever. Dollar was another loser on the day, as was the Canadian dollar and the Australian dollar. But interestingly, the Kiwi was up, and so was the pound. So it's a very mixed bag overall. When I see stuff like this, I don't like it. All right, I don't like it. It's not following the typical regimes that we would expect to see, given the broader context in which equity markets are trading. All right, so when I get a mixed bag like this, it doesn't make me very excited, but we're still going to take a look at some stuff, so don't worry. In terms of velocity scores, the Canadian dollar really suffered here. And the reason the Swiss franc has a +2 and not a +3 is because, and you'll see this once I take a look at the Swiss franc chart, it's possible that we may have topped out and some of those momentum indicators are starting to turn lower. The cryptos are not quite, as bearish in terms of their velocity as they were yesterday, but that doesn't mean that there's any reason to go looking for a bottom just yet. So let's hop into TradingView right now to take a look at some potential trading opportunities. Well, I don't have individual currency pairs to look at. Today we'll be looking at the baskets. So the Canadian dollar is really interesting to me. Now, if we go to a monthly time frame for a second, that candle, I get it. I know we're not through June yet, but that candle looks really bearish. And there is definitely potential for the Canadian dollar, to trade lower. I'd say back to this level that I have on the chart, 85, 82. That would be an incredible short. This is all very iffy right now. It's definitely very speculative. We're still in the very early stages. This is one strong reversal day for the CAD, but we have just visibly broken this trend line here. We're trading below both moving averages. If we get some follow through and these moving averages can cross down on the daily time frame, that's when my mentality is going to switch to selling rallies instead of buying dips in the Canadian dollar. Now in the Swiss franc, okay, you'll see this. All right, we're coming up into just some obvious structural resistance here. All right, there's a lot going on up here. We haven't been able to break out of those levels since 2020, or the last time we traded above those levels was in 2020, I should say, and we failed every time up against them since. However, this is the first time that the S&B has made a significant shift to its monetary policy, so we'll have to see whether or not the Swiss franc can hold on to its gains. I'm not so sure. I'm not so sure that it will. You can see here the RSI is turning lower. So I'm just not super confident. We've gotten a huge move away from those moving averages, which tells me that this is probably overextended and it needs to trade either sideways and wait for the moving averages to catch up, or we're going to get a sharp correction to meet those moving averages. All right, I think one or the other is a highly likely possibility here. So I'm kind of wary of playing Swiss franc on the long side, despite the really strong day that we had. I'd really want to see us break above this resistance area, stabilize on top of it, and then I'd be a buyer of dips. Heading over to the pound. Okay, so we can see here that we've put in a nice showing this week. All right, I like the long lower wick on that candle. There's a lot of congestion to the left of the chart, so there's definitely been demand for the pound at these levels. What's interesting, however, is that when we take a look at the short-term action, we're running into resistance here. And the RSIs are not quite overbought, so on a momentum basis, we still have a little bit more room for the pound to trade higher. So I'm going to be very interested to see if we can break above this resistance block and then hold above it. Now, as far as the yen goes, let's see what happened on the daily chart. Look at this. We ran right into the moving average and rejected it pretty much to the tick. So right now, this is not looking so good for the yen. Maybe we need a catalyst here in order to push the yen in one direction or the other. Given if the BOJ comes out and starts defending the yen and we continue having a risk-off environment, then I can see a lot of tremendous upside in the yen here. So I wouldn't be surprised if we got a test of these prior highs here, which would be a really big move in the yen, and that could coincide with further volatility in equity markets. And then finally, I've got the dollar. I mean, we made a new high here above the May 12th high, marginal new high, and then we failed. If I look at this on a monthly chart, this has historically been a reasonable area of resistance in the dollar. Okay, so the only question is, how far does this slide go? It's really a question of how much further the market thinks the Fed is going to take things as far as interest rates go, and how quickly the dollar's peers will be raising the rates of their own currencies. So what's interesting is that for a long time, we've had this regime in monetary policy called beggar thy neighbor, or the race to the bottom, where many countries were trying to devalue their currency. And now it's possible, given the face of this rampant worldwide inflation, that central banks are going to try and adopt the opposite and try to strengthen their currencies in order to get ahead of inflation. So it'll be very curious to see how the dollar responds here. I don't have a strong view one way or the other, but given how far we've gone, I wouldn't be shocked to see a slide a little bit lower, test these moving averages, perhaps even these lows from the end of May, early June. So there you have it. Those are the potential trade setups that I'm looking at in the currency markets. And in conclusion, so the markets reversed yesterday's gains. The short-term technicals are getting more oversold, but just because something's oversold does not mean it's over. And of course, crypto remains in a bear market. So take a look and see, keep an eye on the news wires overnight and tomorrow morning. Let's see what Powell has to say, and let's see if the BOJ is going to come out with a statement. So stay safe out there, keep your position sizing in check, and always, always follow your trading plans. Take care, guys. See you next week.